Singapore Airlines could return to black later this year. That's according to analysts who point to the faster than expected aviation sector recovery. The carrier is also steadily increasing its passenger capacity while trimming its annual net loss by about 78% to 962 million Sing dollars. Heidi Young with more.
There are clearer skies ahead for Singapore Airlines. The carrier has continued to innovate and invest to improve its products and services throughout the pandemic. SIA is planning to ramp up passenger capacity to 67% of pre-COVID levels by September. It also brushed off concerns that Boeing's delayed delivery of its first 777X planes to the airline will affect its recovery plan.
We do have some flexibility in terms of making up for any potential loss in capacity. So you'll see that because some of the aircraft we own, we can extend the use of it. Others, even on lease, we can also have the options of extending.
Mr. Goh adds that China's absence in the overall aviation market is unlikely to unravel growth.
We are very agile. Where there is demand, we can very quickly deploy our resources to where the demand is. And we believe that over the next year or so, there will be opportunities for us to tap this demand, and we will be very responsive to those demands.
One analyst says the Singapore carrier is in a stronger position to seize recovery compared to its peers because SIA kept its staff ready for service.
They didn't let go many pilots, so the pilots are ready to get going again as demand picks up. And also they still have a large number of flight attendants able to come in and, basically serve on these flights. So they were able to, keep their staffing level fairly high.
But he warned of potential headwinds ahead, such as higher fuel prices and the possibility of another COVID-19 variant. SIA also addressed its higher airfares, saying it's a function of demand and supply. It expects fares to drop in about 2 months. Another analyst says current tickets are about 25% more expensive than pre-COVID levels, and it could help SIA offset some inflationary pressures.
We do expect flight ticket prices to come down to moderate closer towards pre-pandemic levels, but in the meantime, in the short term at least, we believe that significant pent-up travel demand will support flight ticket prices at current elevated prices.
Some analysts expect SIA's passenger capacity to hit 80% of pre-COVID levels by next March. They believe the airline could turn a profit from the July to September quarter.